So I'd like to welcome personal finance expert and author Pattie Lovett-Reid to our show. Pattie is known for giving tips on how people can save money and stretch their incomes. Many of you will recognize Pattie from her days as former chief financial commentator for CTV News. She is currently chief financial commentator from Home Equity Bank. And in the past, she also served as senior vice president at TD Waterhouse Canada. And also, I have to add, worked with me many times on BNN and on her own personal show a few years back. I had the privilege of working with her as well. So I'd like to welcome Pattie Lovett-Reid to our show. Thanks for being here, Pattie.
Allan, I'm absolutely delighted to be here. There is just so much going on, so much fear, concern. Go ahead. Let's just chat.
Let's just chat. Yeah. And so, I want to start off by talking a bit about the markets. Obviously, the markets have been down for most of the year. I think fear or investor fear is at pretty much all-time highs right now. A lot of people don't know how much further this market can go down. I get calls all the time, Allan, how much in the way of losses do we have to weather before we start to see things turn around? So I guess my first question to you is, what do you think is causing this market to fall as much as it is? Obviously, central
Recording
banks
in progress.
have a lot to do with what's going on, but do you think the response by central banks to what's happening, the inflation rate, is actually worse than the inflation rate itself? Is the cure worse than the disease? What do you think, Pattie?
Well, that's an interesting way to put it because, there's no question about it. Fear is getting near record highs. We've watched people pull out of the market at levels that we haven't seen in about 32 years. And so there is a certain element of anxiety. There's no question. I do think central bankers around the globe need to beat down inflation, and the sooner the better. The problem is it takes time. Has it peaked? I'm not certain. Will the Fed and even the Bank of Canada go too far? Maybe. But at the end of the day, I do think, Allan, we can only control what we can control. I can't control the markets being volatile. I can't control that interest rates are headed higher. September living up to its reputation in the market, no question. But what I can control is how I respond. And so I can tell you, and I'm very comfortable telling you, we have not sold out of our positions in our portfolio. We maintain steady as she goes. I do and believe I can control my asset allocation. And that, of course, leads into diversification. And, in many cases, we're being paid to wait, where really good quality companies, leaders in their industry that have been consistently paying that dividend, well, they're blunting the blow to some extent. So are people anxious about it? Absolutely. Are they living close to the margin? They are. But I also think, Allan, and I'll throw it out there to you, is that there is this fear even in the background with all of this, that the economy is headed towards a recession. It'll depend, the odds start to increase as rates go higher, people stop spending, corporations aren't making what they once were, and you put it all together, it's a very uncomfortable and sort of scary period.
Yeah, I agree. And, we heard Federal Reserve Chair Jerome Powell say recently that the biggest thing he's hearing from the people he's talking to is that higher inflation is eating into paychecks, into people's incomes. But I guess the question I would ask if I had access to him was, it seems as though they're choosing the lesser of two evils, right? So they've said that they need to see or are willing to see unemployment rise before they can get inflation under control. So I made the kind of cute comment saying, yes, it's eating into people's wages, but if you're going to raise on the unemployment rate because you're raising interest rates and people are going to lose their jobs, then what is it going to eat into? Perhaps people's credit cards. So
we're seeing that.
Yeah, exactly. It's a difficult balancing act. I guess they're choosing the lesser of two evils. They're trying to bring down inflation by slowing down demand or clamping down on demand. And I'm not so sure that is the right answer. At least raising rates makes sense, but at the pace they're doing it, one of the fastest paces we've ever seen, going back to the Volcker days. So I'm not so sure that the pace of increase at least should not be slowing down at this point in time, and perhaps taking a pause to wait and see what effect this is actually having on people in general.
Well, I think that you're not alone in that thought. We heard from one of the Fed officials in the US, it wasn't Jerome Powell yesterday, that made reference to the fact that the Fed may overshoot, may go too far, too fast. And then the markets had a hard rally, reversing course from the previous day. Then they start to sort of, pull back yet again. It's one of those things when it comes to inflation, people, yes, they are saying that it is eating into their paycheck. I also think sometimes inflation can become a self-fulfilling prophecy. And so what I mean by that is more and more people are saying, okay, I'm going to go out and get a secondary income so that I can continue the lifestyle that I have, or I'm going to compromise. And if rates continue to go higher, what this means is I won't be traveling. And then the knock-on effect, the volatility in the market, and this is just something that I think happens, is that you get to a breaking point. And I talk to the average Canadian on the street. So my fitness instructor, I was working out with her, and she said, I sent back a designer pair of leggings because all of a sudden I thought to myself, the extra $20 that they're now charging for that isn't worth it to me. So she is sending a very clear message to the company that, and it's one person, but if one person does it and another does it and another does it, eventually, yes, corporate profits are going to be eaten into because they're not going to be able to pass this along to the end user. So you've got on the one hand where people can say, I am going to be part of this inflation cycle. I have a rental property, and like everybody else, I'm going to continue to raise the rent. And they'll get to a point where that renter says, I can't do it anymore. I can't pay that anymore. And then things start to tip over. So I guess my point is, it depends on whether or not you decide to get through this period of time by pulling back on your spending, on being razor sharp on your numbers. Know that we've gone through periods of inflation before, and we will get through this period as well. It's been around longer. It has certainly not been transitory, and that's what's frustrating. And so I think this is a little uncharted for the Fed, and I agree with you. Two things are going to happen. Either you're not spending because things are too expensive, you're not spending because you don't have a job. And so any way you look at it, the outcome is the same, and that's the economy continues to slow.
Yeah. And how do you find, I guess, your conversations with small business? I know I've talked to a few, they're seeing their costs rising now every which way you can imagine. Either it's raw materials or they're seeing, salaries going up. Obviously, they're having a problem with labor. They can't find enough people to work a lot of places. Now, all of a sudden, the debt that they've taken on to grow their business is now costing them a lot more over the past 9 months. What are you hearing from small business? I know I'm hearing a lot of negativity, unfortunately.
Yeah, it's a very negative environment. It is a very tough environment for small business owners. There's absolutely no question about it. I'm hearing the same thing. And I wonder, when you look at our immigration here in Canada, I will talk to young workers, I can say that, very young workers. And what they will tell me is that, yes, they want to work and yes, they can find jobs, but there're just not enough of them out there to fill all the job vacancies. And last I looked, I think we've got like 1 million job vacancies here in Canada, but we don't have enough people to fill them. So it's not that people don't want to work, but on the other end of the spectrum, you've got those in a certain demographic that are saying, I've kind of had enough and I can afford this. But we can't sustain that here in Canada. Like, it's just not. And then you've got those who simply say, if I, for example, I work in this particular diner and I'm, being paid X amount. If you're not prepared to pay me more because the small business owner can't, then they're going to go across the street because the other guy has been looking for people for quite some time and they will pay a little more if they need to so that they can stay operational. But it seems to me, I get this feeling that it is a vicious circle without being able to say, okay, here are the 5 steps that you can do. to get out of this. And small business owners are struggling.
Yeah.
And you know what? I'm part of the problem. And I'll say that, Alan, because here's me saying, okay, stop spending. Don't spend.
Yeah.
Build up that emergency fund. You'll get through this by having, cash is king right now. There's no question. But on the other hand, that same person who is saying, okay, I know the difference between a need and a want. I'm not going to go out there and buy that because I might want it, but I don't need it right now. And the knock-on effect is the small business owner that needs those who can afford to spend.
Yeah, no, for sure. They get hurt. So let's, I guess, try and end on a good note.
Okay.
And I know we've been a bit negative. So let's try and put on, I know I get asked this a lot, going forward, what do I see? Is it possible we could get out of this, I guess, time and move into better times for the markets?
And we will.
And we will, absolutely. So I guess my last question to you is, what do you foresee heading into 2023? I know I've said already, I've gone on record saying that I think the fourth quarter actually could see a bit of a turnaround into next year as the Fed and Bank of Canada start to slow down the interest rate hikes. I think things can start to get better. What do you think heading into next year?
Yeah, I'm thinking by the end of the second half of the year, we will start to see real progress and we'll start to see things slow down. It may not and probably will not be where we would like it to be. But I do think, you start to look at some of the metrics and they're moving so slowly in such a small way. But maybe things have peaked. And when things start to peak, they start to go down. And you know what I'm going to still watch for? Capitulation. That's when that last retail investor throws in the towel, because guess what? You guys, the institutional guys, will be in there picking them up. And that's what I don't want people to do. If you've got good companies, hang on to them. We will get through this. This is not our first economic downturn.
Absolutely. And we've been saying that. I've been saying that to investors now for a little while. Be patient. Difference between long-term and short-term. Got to know how you're investing. And again, I want to thank you. Emotions, for sure.
Get your emotions out of it.
Absolutely. I want to thank you for coming on today.
Thank you.
I really appreciate it. It's great to see you. And I'm sure we'll see you a lot more. I know you were telling me earlier, you're quite busy. So everyone will see you in many different places. And good luck with everything. And I look forward to having you on the show perhaps down the road.
I sure hope you will. Thanks, Alan.
All right. Have a great day. Bye-bye.
Bye.